How to select stocks for intraday trading. In today's video, I will show you what method I use to scan 150 listed NSE stocks which are available for futures and options. In today's video, I will show you my method how I scan 150 stocks so that next time when you sit in front of screen, you don't feel like what stock should I trade, how to find a breakout, how to find the stocks where long has been built up. In today's video, I will show you the method and the right way to scan the market. So without wasting any time, let's jump into my screen. So first thing you have to do is go to moneycontrol.com. I'm sure you would have heard about this website. I'm sure you have been using it regular to get news and update, but you can use money control also to find the stocks where long has been built up, to find a stock where people are shorting the stock, where long is getting unwind and short is getting covered. So in money control you can find these things. I will show you where you can find these things that are happening. So nothing, just go to market and go to all stats, right? Once you get into these things, go down, nothing you have to do in these things, go down, you'll come in this section, open interest analysis. Just click on the third one, increase in open interest and increase in price. So if you come here, you will see a lot of things, right? Now, what is this increase in open interest and increase in price means, right? It will be written here, right? Increase in open interest and increase in price means in that stock, people are buying that stock in futures. Long is getting built up in that stocks, so that when if Nifty is bullish, let's say overall market is bullish, your view is bullish, you want to take trades in stocks which are in that direction or in that trend. So these are the stocks where long has been built up, right? People are buying futures in their stock, people are buying more and more contracts in this stock, so that the open interest are increasing and plus the price are increasing. It means long has been built up. Now increase in open interest and increase in price means long is being built up. For example, let's say Yes Bank, Idea, ITC, Saman Capital, REC, Idea, in these stocks longs are getting built up. Next, you have to go increase in open interest and decrease in price. Once you will click this, it means in these stocks, the shorts are getting built up. Means people are shorting in futures in these stocks. NMDC, GMR Airport, NMD Sale, Manappuram. If you look at AB Capital, you can click here and select for expiry. So let's say you want to go for an expiry of 28 October, click on 28 October. And in 28 October, which all contracts are getting shorted, you will get in this, click on here and go, right? Once you click on go, so this month contract, what all in this contract, which all stocks are getting shorted. Now increase in open interest and decrease in price means contract stocks are getting shorting, people are shorting that stocks. So NMDC, Sale, Manappuram, AB Capital, in which shorts are getting built up. So you go scan these stocks, you go to trading view and you scan these stocks and you see whether you getting a breakdown or whether you are getting a trading setup so that you can trade in that stocks. So this is the method where I find stocks whether I have to go long, I have to go short. First thing, you will understand the direction of the stock, right? So in these stocks, increase in open interest and decrease in price, which means the shorting is happening. In the second one, which is the shorting is happening, in that, why will I take long positions, right? In Manappuram, why will I take long positions where the people are shorting the stock? I will look for shorting opportunity, right? Any breakdown, I will short the market. Similarly, next, the third thing is decrease in open interest and decrease in price, which means the long is getting unwind, which means if people have long positions, they are cutting their long positions in the third one, which is decrease in open interest and decrease in price, which means long is getting unwind. So people who have long position, they are squaring off their position, they are no longer believe that the stocks will go up. So in that, go to expiry, go to 20th October, click on go once. So these are the stocks where people no longer believe that stocks will go up, so which means the stocks usually go down, right? People are no longer interested in long positions, they will go into cutting their long. So in that way, the stocks will head towards downward direction. So in that stocks, why will I take long positions? For example, Tata Motors. Why will I take call options? Or why will I buy futures in Tata Motors? I will look for shorting opportunities in Tata Motors, because people are unwinding their longs. People are unwinding their long position. They are squaring off from their long positions. So there's no point of me being long here in this stock. Now, the third thing is decrease in open interest and increase in price. Decrease in open interest and increase in price, which means short covering. Short covering means the people who are short in the market, they are covering their shorts. Usually when that happens, the stocks goes up. In long unwinding, people are cutting their longs. They are no longer interested in longs. They are interested in nothing. They believe that stocks will not go anywhere, right? It means whenever that happens, stocks usually go downwards. Short covering is people think that now the stocks has very much sold, lot of it been short has been there, we have to cover our shorts. So in these stocks, if you go to 20th October, go. So on 20th October, these are stocks where people believe that the stocks are have to go short covering. They're cutting their shorts. They're not building longs. They're cutting their shorts. You have to be very clear. They are not building longs. They are cutting their short positions. It means if people who have sell futures or sell, they have sell call option, or say they have bought put option, they are squaring off their positions. They don't believe that stocks will go downward from here. It can go up or it can be in sideways, but not on downside. So this is how I scan the market. This is how I scan the stocks. So let's say if Nifty is very very bullish, I will go into increase in open interest and increase in price. If I am very bullish in market, I want stocks also that are bullish. I want stocks where people are building long positions in the market. So these are the stocks where people are building long positions. I will not go into short positions or either. My focus will be only into stocks where long has been built up. So increase in open interest and increase in price. Another example, let's say if I am very bearish in the market, I am not looking for any stocks where long has been built up. I am looking for stocks where short has been built up. So I will go here. And second number, I will go where the short has been built up. So these are the stocks where I will trade. I will not trade in long or long unwinding or short covering. I will trade in this one. So I hope you would have learned a lot. I hope you would have understood how I scan stocks, how I make the trade. Thank you for watching. I hope you would have learned a lot. Make sure you subscribe and like and share with your friends. Thank you for watching. I'll see you in the next video.